Jerome Powell, the head of the Fed, spoke. Again, you know, his job is to keep confidence in the market, so he's going to give all the positive things. Now, he did mention about the deficit spending is really concerning, and that the Feds, they're going to be actually monitoring that. The central bank is going to be monitoring, you know, the deficit spending, right? We got a lot of deficit spending that's out there. Trump is, you know, blowing this thing up, spending all kind of money. So that's a major issue. Debt is the issue. Corporate debt, to be exact. You know, we got corporate debt levels higher than, you know, back, you know, before 2008 crisis. Even the IMF has been sending warnings about it. So those are particular risks that we also have. And these are the things that was talked about this past week. The coronavirus was like, again, probably like the major thing. We're still leaking off of the coronavirus. We'll dial into some of that here in a few moments about the coronavirus. What else? We had, I guess, some political things going on as well. But it was a pretty all right week. It was kind of choppy, you know. We had some up days and then we had some down days. Right now, the futures are up just a tad bit. But keep in mind, coming in this week, tomorrow, the markets is going to be closed. Stock market and the bond market is going to be closed tomorrow. I know you guys are sad to hear that, right? Not playing. Y'all can relax tomorrow, okay? The market's going to be closed on George Washington's birthday. So you don't really have to worry about that. We do have some earnings coming up. I know last week was pretty light. We got a couple of earnings this week that I'll be paying attention to see how the market is, you know, how the market absorbed the fourth quarter, basically. So we still got some names on that. And, you know, that was pretty that. So a couple of things that did come across my my radar this week was about it was really about the I think Trump's tax breaks. I think I posted it in the group. If you guys saw that, Trump tax breaks for, you know, to get people to start buying stocks. It's crazy. You can get a tax benefit just from buying stocks. Now, you got to understand that we're in the matrix. OK, the matrix, Wall Street, stock market, all the stuff you guys see. This is all a matrix. It's all behavioral. OK, so economics, money is not just money. It's about behaviors. OK, as a data analyst, we can change data by rewarding or punishing behaviors. And then the behaviors is what drives the numbers. So we coach behaviors. The behaviors change the numbers. That's how we change the numbers. OK, still free will, because we don't actually do it. We got to influence your brain and make you go do what we need you to do. Right. That's why it's a matrix, because it's a controlled world. Nobody's holding a gun to your head. It's just influencing decisions. All right. And it starts at the top with the banks. So one of the things that they're trying to do right now, as you guys understand, monetary policy is almost, you know, futile. OK, we don't have much left in the tank. I'll pull up the yield curve so you guys can see that in a few. But to keep the economy stimulated, you got to remember, we got monetary policy, which is the federal government, central bank. Then we got fiscal policy, which is the central government. That's Donald Trump, Congress, all of that. So you got two different forces that's, you know, trying to stimulate the economy. The Feds, they use interest rates. OK, so that's what they use. They drive the interest rates down when they need to get people spending money, when they need to get credit in the system. They need to print money, whatever, to get people spending money. So I'll pull up the in fact, let me just pull that up here real quick with the yield curve. And again, this is on our website. If you guys want a link for it, let me know. Send you a link. All right. So let's just expand that real quick. This is the yield curve. This is what it looks like. So with the yield curve, let me, if I can probably go back. Oh, let's see, I got today. Let me just go back to all. Oops, not on that chart. Let's go to this chart. So we don't want to look at that one. You're not going to get what you need from that one. Let's go to this one here. And all right, so we got all here. I'm gonna just keep it here for a moment. So this is what we're gonna talk about, okay? So with the yield curve, you got to understand the Federal Reserve, to keep things stimulated. All right, you pay attention to these numbers here on the side. Now, every time in the past, to save the economy, you know, to come up out of a recession, the Federal Reserve normally need 5 points, okay? As you see, this chart don't even have 5 points anywhere on it, okay? Because we're so low. Interest rates have been artificially suppressed so low, okay? And it's to try to keep the economy spinning, keep money in the system. And also, you know, buying treasuries. We're almost hitting a record high of the central banks buying treasuries to keep this bubble going. So they're doing everything they can to keep it going. I'll show you why here in a second. So this week, the markets is choppy, but this is something that they pay attention to, is that the market went into an inversion again. Okay, so we're back at yield curve inversions. If you guys been for a while, you kind of already know about the yield curve inversion. We got a whole 2-hour class where I taught you guys about how this stuff works. Prices go up, yields go down, right? Vice versa. So this is where, remember, okay, last year, all the news was about a recession coming. Why was everybody talking about a recession coming? For you new people that don't know, it's because this yield curve had inverted, okay? This yield curve inversion is signaling ahead in the future. It's letting you know, oh, recession is coming. And it normally happens within 12 to 24 months, right? And this is the most perfect, accurate indicator there is, all right? So when you see this, it doesn't mean it's going to come tomorrow, but it means that you need to pay attention because it's coming, all right? So what happened was, if you guys pay attention to this part here, this was last year, okay? We were inverted. But you see when it came out of inversion, all right? So you see when it came out of inversion was right here, all right? So why is that important? That's important because that's when the Fed started coming in doing quantitative easing, QE4, all right? But they don't want to call it that. But them buying bonds, them shooting money into the markets, repo markets got, cracked, spiked overnight. They lost control over it. So they've been pumping billions of dollars into the financial markets, every freaking day. Okay. So from that, the yield curve popped out of inversion. So this is regular. This is the way the yield curve is supposed to look. The blue line is supposed to be above the gray line. All right. You guys can see this. Blue line is the long-term bonds. Gray line is the short-term bonds. So long-term should be higher than the gray. All right. That's what it's supposed to be. It inverts. That means something is wrong or something bad. Recession to come. All right. So anyway, popped out. The market has been shooting up ever since, right? Because it's like, oh, the Feds have came in. They're supposed to be the referee, but they threw on jersey and they playing the game. So, okay, the markets know that, Feds is coming in doing what they do. So you got a lot of risk. So we say risk on, meaning that, these companies, they've been putting money into equities. This is the reason why the stock market keep going up, right? Because they know that the Feds got their back. Also, because the bonds are so low, okay? Smart money buy bonds. Most people don't even understand how bonds work. Again, we got a whole 2-hour class on that. But just understand this is the safest bet in town, right? You guarantee to get your money. But the problem with these yields, right, and you guys see them, they're really low. And the Fed's got this inflation target. Now you need to break even with your inflation before you even break even. So if inflation is trading at 2%, whatever investment that you're doing, you need to get at least a 2% return on it for it to be a viable, investment vehicle for you to, make some money. Okay, because inflation is going to be up higher because the Feds are trying to stimulate it. And the inflation, again, that's your purchasing power, the value of your dollar. It increases and decreases based off of that inflation. And so as that go up, and if inflation is at 2%, but bonds, the safest bet in town, is under 2%, I mean, you get you're getting 1.5%, you're negative 0.5. That's negative. All right. Smart money. This is how they calculate investments. This is why you see all this money pumping up into the stock market, because the bonds are so low, they can't make no money off of this. So it's like money comes out of safety, money goes into risk. So it's like, hey, I'd rather go into risk because I'm losing money on bonds anyway. So why am I going to put money in bonds if I'm going to lose money anyway? All right. I might as well put some risk on in equities, take that gamble. It's a little higher risk than I want, but at least I'm going to make some money. And that's paid off, really nice. The market's jumped up 31% last year, right? So that was big money that was made last year. This year is going to be a really tricky year. We got lots of volatility in the market, and we had some unknown factors that showed up that we couldn't even calculate, the coronavirus in particular. So anyhow, so the confidence came back into the market. The bulls is in there. They don't even give a damn, right? And then you get this inversion. So depending on, how far this inversion goes, if it pops back out, and this normally happens before every recession, the inversion, it pops in and pops out and stuff like that before it comes. Like I can show you guys every past time. It happens every time the same way. So we want to see if this inversion continues to go further lower, or would it pop back out? And also how the markets are going to respond to this. Now, I think a lot of this also, coronavirus, I think, is going to have a major issue on the global, the macro economy, right? So all the countries, all together are really suffering or going to suffer from this coronavirus. Okay, so we talked about this, I think, 2 weeks ago, and I was talking about it for you guys. But I just want you to see where we are in this cycle, right? Because that's what the yield curve shows us. That inversion is back on. So again, fear, you got to understand, if the markets react towards this, then we'll see the markets to go down. People start to try to pile up in safety. We haven't seen that in the markets right now. They keep faking it. They faking it like ain't nothing wrong, right? But when you know the yield curve and stuff like this, then you know something is wrong. Something is not right. So I just want you guys to see where we are with that. Let's pull that down. All right, cool. So here we are today in the equities, and the markets are super high. All right, we got this nice melt up. And to be honest with you, the markets could definitely use a pullback. I don't think no investor is, upset about a pullback. I think all of us would like a pullback so that we can get in on these things at better price points. The problem is that the equities market is so overbought. You're overpaying for these things, these companies. I say things, but we're talking about companies. That's what stocks are. These companies you're paying, to make some value, some money in the future off of these at the price that you can get it today, right? So the present value, is it worth it in the future? And with these prices so inflated, these equities are overbought, okay? So you're not buying low. The key to investing is buy low, sell high. So being that assets are still extended, this is still not a good position to be buying equities. However, you're still going to see funds pouring in because they had to generate a profit. And as I just showed you guys, the yields for treasury bonds, can't make no money off of it. So they're putting risk on, for the sake of generating profit, right? Because again, inflation is going to eat away, if inflation is at 2% and, yields at 1.5, you're negative. Okay, you got to hit 2% just to break even. So wherever inflation is at, and again, that's controversial about, where inflation is at right now, but just know when the Feds cut rates and pump money in the markets, it's to stimulate, it's to, cause the inflation. So protection from inflation is gold. Okay, so let's just take a look at gold. Gold doesn't give you dividend payouts and stuff like that, but it's protection against inflation. Okay, so when you see asset classes like bonds and gold, utilities, right? These are all safe havens. Okay, smart money pile up into these safe havens, right? When there's risk in the system, right? Because as equities go down, these go up. Now, when you have gold going up, bonds going up, and then you have equities going up at the same time, that's a divergence. That's mixed signals. It makes it harder for smart money to play in this environment because now we don't know what's going to happen. We don't know, where's the money going to go, right? Where's everything going? But if you just take a look at what are you seeing in the system, you have to take a look at those risks. Okay, now this is gold. Gold is up. Gold is doing really good. Okay, gold is doing really good. And right now, with the futures market, gold is trying to pump higher. Gold is also in a squeeze. Y'all know our setup here, Wallstreet Jackboyz, is our nice squeeze pop play. And, we're seeing that here in gold that's happening right now. So let me just highlight that real quick so you can see it. Okay. All right. So this is the squeeze. All right. That was a little fire there on this dot here. It didn't come all the way through. So the squeeze is still on. All right. And it's waiting to fire long. Now we did last have a trigger back here. It says get in right here. Now, if this thing goes according to the technicals, then we'll see gold shoot up at least into this next target, which is 1600. So gold is eyeing 1600. Okay. That's its first initial target. It hit that target back here. Didn't clear it all the way here, but it did test it. Okay. So the next test is the $1,600 target. The squeeze normally give, it enough power that it pushes through those levels. Like we see back here in the past, this was a squeeze and it fired all the way up. Okay. So when we see the setup, that's what it's telling us that there's, when it fires long, we can get that fire all the way up to 1650, 1660, what have you. So this is very realistic, high probable setup, and this is gold. Now, it doesn't mean that I want gold to do that, because in order for gold to make that kind of move, what typically has to happen is that something bad has to happen in equities. That means stocks go down. Now, we just looked at the S&P 500. We didn't look at the NASDAQ and the Russell. We could take a look at those too. But just looking at the charts, the charts are bullish, clearly. Now they are overbought though. So that's another problem. Who's buying at these highs? Now I don't want to come in as short at those levels, but I do want to put on some hedging. Okay. So last week I did put on positions in gold. Okay. That's right, Terrence. It's tricky. Yeah. So again, I got some exposure in gold right now because of what I just showed you guys. And again, this is the idea that I'm looking at. Doesn't mean that it's going to 100% work. You guys know how this plays. So you got to manage your risk. But the setup is there in gold. So another setup, and again, if you want to know which stocks to play, right, in gold, and I pull up a watch list here, but GLD is a easy one to remember, GLD. This is the gold ETF. Let me just pull up a couple of names just in case you guys are interested in these here. Okay, so you see these stocks to the side, pretty much any of these names over here to the side will pretty much do the trick. All right. All these names over here in this little box, basically. Now GDX was interesting because we did have a play in GDX. Let me see. Let's see GDXJ. This is the junior gold miners. Okay. Now I just showed you the index. The sector itself is in a bullish squeeze. The chart is bullish. It's in a squeeze. It's poised to blow higher. And then what you want to do is dial in from the big picture into the smaller pictures to pinpoint your capital, right? Because you're not going to buy the futures. You're going to buy the individual ETFs or stocks, right? So this one here, the squeeze, again, I've been on this for about 2 weeks. Now the squeeze did not materialize. I think, look, 2 weeks ago. It's still on, and it's definitely clearly made its floor right here at the 618. So we're looking at the Fibonacci here. I'll just show you guys on the Fibonacci from this swing high, right, to that high right there. That's what we're looking at. Okay, we see that floor, which that's the pink line. You guys see the 618. So 618 is there. Excuse me. We'll just take a retracement from that line to that high to that low. And that's how you get this chart here, okay? The floor, even if I remove the Fibonacci, you see my moving average is here, that pink line here. Okay, so I use both of these at the same time. And you see how it's, bouncing off that floor, off that 50. That 50 holds. That 50 is true. That 50 does not break. That 50 is right on top of this 618. So that is clearly the floor, all right? So when you got the floor in there, you got the squeeze popping in there. You got the trigger that says, hey, buy me now. That's what the trigger is telling us to get in, right? And if this thing plays out the way that it should play out, and again, it's if, all right, it fires long. I don't know how long it's going to fire, but we do have an upside target about $45 in there. And that'll be a really great play. The question is, how long is it going to take for GDXJ to hit that target or any other, gold position? So anyway, these are just some good names. These are some setups that, again, I'm already in gold. So, but there's some ideas for you guys. All right. Another one is silver. Okay. Silver. All right. So silver is also doing the same thing, right? Silver has a nice setup. And to be honest with you, I think silver is in a better position to move even higher than gold just because it's priced at a level that's low enough where investors, would like to pile in at this level. Like you can just look at the chart and you can pretty much tell that you're getting a good deal, right? Because again, back here, you got, the thing trade $19, almost $20. So you already know some buyers out there want this at $20. So that's a target that it wants to reach to. And you could pick this up at $17, right? Versus gold, $1,400, $1,500 is a little more expensive. But silver, I mean, you can literally buy the stock itself or go buy you some physical silver, whatever you choose, right? But the cool thing about silver is that it's got this interesting little setup here. It's almost looking like a head and shoulders a little bit. You see that, Ron? You see that? The shoulder, like a little head right here. Look like we got another shoulder forming over here. That's an inverse head and shoulders, setup there. And this is a bullish setup. That means that, okay, this setup goes the way it's supposed to go. Bingo, it shoots higher, right? So it's going to come back and hit that, again, $19 is trying to hit that $20 target, basically. But, along with that pattern, we got a buy trigger that says, hey, get in now, right? We see the stochastics and everything starting to shift around. We see the momentum shifting up from red to yellow. The squeeze is in play. All right, that squeeze is ready to fire. All right, which direction is it going to fire? Okay. So again, I mean, it can fire short, but it doesn't look like that, based off of, what we're seeing. The technicals is showing me that it's going higher. So you want to pile into it, right? You want to get in the move before it takes off. So once you're in, boom, you get in. And then when it fires, you're riding the wave. All right. So all you new traders understand that it's not all about seeing a print, but, oh, it hit a new high and then you get in. And then you'd be like, oh, I got in off the high, but then I'm losing money because it's coming down, right? That's a newbie mistake. So all you new traders, people that's new, I know we got a couple new people with us here. That's not how our setup plays here. And again, if you don't have the training, go to the website, wallstreetjackboyz.com, sign up and get the classes so that you can get the blueprint on how you do this. So you wouldn't be lost. Again, I definitely still, thank you guys for showing up. It's good that you show up. I was lost for maybe a year training with my mentors. I mean, these guys are so advanced. I didn't even understand anything, but I got it eventually. Being in class every day, all day, learning, listening, you learn. You pick up the tools. It's kind of like if you move to another country and you don't know how to speak the language, or you're around it long enough, you're going to start to pick up context clues of, okay, this is how it's supposed to work. So again, it's still healthy for you to be in the environment, showing up the game plan Sundays. Thank you. This is good for yourself to show up. All right. Next time, bring a friend. All right, cool. So silver's looking really good. I just showed you guys. This is what I'm looking at in silver. Now, also, if you want to look at some names in silver, right? Let me pull up my list. Okay, here goes some stocks over in silver. Okay. WPM in particular. It's looking pretty good. All right. So again, we just saw the index itself is bullish. It's got the squeeze set up on it. So that's the macro, the big picture, right? The futures is looking squeezed, for that, poised to take off. And then we're going to dial in on individual names, right? That's where we're going to deploy our capital. What do you want to trade? Okay. You got the squeeze that's right here on this one as well. Okay. Bingo, squeeze. Okay. That squeeze set up, trend moving up, stochastics moving up, like buy trigger right here. And you saw that last candlestick move up real nice. So it's money that's already interested in the silver stock here. They already starting to try to pile up in this thing. So again, next target up, 31, but the squeeze fire long. All right. We definitely can hit the, 33. All right. And earnings is coming up, I believe, next month. And so what we're looking into this thing to make its move before earnings. All right. You don't want to really be holding this through earnings, but you want to, get in and get out before earnings. All right. All right, cool. Tell me if this makes sense to you guys or not. I know I'm going kind of fast because I'm trying to get us in and out here today. I'm trying not to take up too much of your time. Let me know if you understand what I'm saying. Type in a Y or something. Give me some feedback, you guys. I know I'm doing a lot of talking here. All right. What else? For you weed heads in here, I think Dustin was tracking weed. I think, okay, so weed stocks are suffering right now. As far as the fundamentals go on weed stocks, they burning through too much cash right now. It's really not a good place to park money. But depending on how the stock market move, weed, I don't think would be impacted by how the stocks move. So I think weed stocks have an interesting place here. And it is at a pretty nice low. CGC in particular, after its earnings, let's see, the 14th. I don't even know how it did on earnings. Did anybody get the earnings on that? Okay. Yeah, so if you get the earnings on here, but if we take a look at from this high to this low, the 618 is here. So we want to see it clear this 618. And it's in an oversold territory. So this is where investors would like to buy it at. Okay, this is a good buy point. When it's oversold, that's where you buy at, right? Stochastics is moving, shifting up. Momentum is shifting, moving up, right? Earnings is over. So the event is done. And the stock is trading right up here, up against this. So depending on, if everything holds itself together, this is a counter trend trade because, again, the trend itself is down. But a counter trend move in this here would be to this target up here. Okay, so to the $27 mark, if the money piles in there. Okay, So this one here is another setup. It's a counter trend setup. So, tread softly. Again, for me, I would like to see it clear this 618. When it clear this 618, that's a trigger for me to deploy capital, ride it in to hit that target, hit this target, get out. We got Elder, which still stocks to watch. So Elder, if you see my screen over here, let me just pull out the arrows. You can see this is my silver watch list, okay? And you see these names over here. You can choose pretty much any of these names if that risk fits your account, right? Because every stock is different, but these are a couple of different names that you can play. So as silver index move up, those baskets, those individual names within that basket, they're going to move up with it. So you can pick and choose one of these names, whatever, fits your account. Because again, trading is a personal thing. We don't know what you bring into the table. So what you bring to the table, I'll give you the ideas. You have to, understand, okay, can my account size handle a $30 stock? Or can it handle a $3 stock or what have you, right? Or options. All right. So that's that. So you can see those names. WPM is real good. SIL is another one. PAAS is another one. So all of these names over here are good for silvers to get some exposure in silver. Who else we got? That still lost a lot of money, but apparently it's getting better. Yes, CGC getting better. Aurora is another large cannabis company that is dragging everything down. Yeah, so Aurora is dragging things down too. But CGC does have a pretty nice play. We already got the floor in here, so we already know $13. That's the floor, and it's been trading up. Again, we got higher lows. Lows are higher, right? Higher highs. So again, higher highs. Oh, you're welcome. So again, the big trend, the long picture is down. So that's why we call it a counter trend trade. Counter trend because it's trading counter to its longer term trend and it's coming up. We got resistance to ceiling up here at that level. And, floors right down here for this one. If you're looking to get in, reach this level, bell the idea, which is right here. That's around $20, somewhere around $20 there. There would be a bell. So, but if it pops up above this 618, then you already know where it's going. So, but that's another idea that I think that will be that won't have any impact from the equity. So, depending on what's going on in the equity stocks, I think weed stocks they're gonna move counter to stock. They're not like weighted on the stock market, right? So equities, excuse me. All right. So, running out of time. Let's see. Coronavirus. Back to coronavirus. Let me get this out of the way real quick. Coronavirus. Let me just explain this to you real quick. Okay. Our markets. You're welcome, Elder. Our markets, understand, our markets are intertwined with China. U.S. equities markets, our markets, we depend on China. Not just us, everybody depend on China. China's the number 2 economy in the world. Okay. U.S. is number 1. Now, just in terms of GDP, I just want you to see this, that U.S. GDP, I believe, is about 2.3. Okay. China's GDP is over 6%, I think 6.1. That's just to give you guys a little context on how fast China's growing. Okay. GDP, that's the growth, 6%. We're at 2%. Again, China's growing, they're on track to overtake the U.S. as the world superpower by 2025. Okay. So understand a lot of macro investors, a lot of investors got a lot of money parked over in China because, again, think about it this way. In the U.S., you got the Silicon Valley, right? We specialize in software like your Microsoft and your Google and things like that, right? But you need a device. You need some hardware to put that stuff in. Where do you think that's made at? Okay. It's made in China. So we need China. You feel me? Trump versus, China, basically, Xi Jinping, however you want to do it, U.S. versus China. The trade war is weighing on the whole economy, the macro economy as a whole. And what Trump is trying to do is secure a trade deal that gives U.S. the advantage over China. Not like a break-even thing, but we need an advantage. Now, maybe he says that China's been taking advantage of it. I guess from the words of Trump is that China has the upper hand in the trade deal. In the U.S., we need to catch up, so we need to get even. However, the narrative is, one thing is for certain is that, everything that the U.S. does is basically to hurt China so that China could fold to this trade deal. Okay, so in the trade deal, you're negotiating. Anybody in business in here, anybody does business, when you do business, it's, negotiations. If I'm negotiating with you, I want the edge for myself. I'm not going to let you get the edge over me, right? That don't make any sense. So in this trade war, it's a war, remember, U.S., we want the edge, okay? And a lot of things is happening to, destroy the Chinese economy so that they had to come to the table and beg for the deal. You feel me? That's the story, okay? Remember, I told you guys the Chinese Lunar New Year is a major holiday. It's like Christmas times 10 over there. Like all the kids get money and stuff like these red envelopes. It's crazy. Money gets out there. The coronavirus shows up, pops up the week of the Chinese Lunar Year. Now, I don't know if it's man-made or not, but it's just by coincidence that just so happened to be the case. And it shut down a lot of money in China. So we have a lot of chief economists that's projecting China's GDP to just fall off the face of the earth, okay, for this year. And then they're projecting that it's going to come back up and stabilize if, they can contain the coronavirus, okay? The coronavirus situation is so major that they're shutting down cities, okay? Now, this will start to have, if they can't fix it, if they don't fix it fast enough, it's going to boil over into, the macro environment because, Apple, okay, again, we can take a look at Apple and all these other companies. They get the hardware made in China, okay? And if China's on lockdown, you can't get your goods. So then you have issues with supply and demand. Now, these are economic issues at this point. And so I know Fed Powell this past week was saying that the central bank, they're going to be monitoring the coronavirus situation closely because they understand the implications they can have even on our economy. So even though we're hurting them, it still come back and hurt us. But when you have, equities market, when you take a look at like the NASDAQ, let's take a look at NASDAQ real quick. Yeah, when you take a look at the NASDAQ, right, you have, this is the tech stocks, right? Tech stocks, your Microsoft, your Apple, these are the companies that's driving the US markets, right? All these, tech companies. When you have evaluations on these things, you got a stock market that's this high, right? You just got to think Trump and them, even if we hurt our own economy, even if this thing retraces back here, man, we still good. You feel me? The NASDAQ could fall off a whole 1,000 points and we still good. You see? So we can actually, we can weather this storm is what the U.S. is thinking, right? So that's, the thought process of going into this thing is that we can weather this storm, right? And even if we take this kind of drop, we still good, right? We can come all the way down here and we still going to be good, right? China, different story. So that's why you have, Trump and everybody going so extra, strong with the trade thing because, our markets, we're better positioned than everybody in the world right now. You know what I mean? But that's why all the other countries, Germany, France, UK, and all of them are like, come on, y'all guys chill out because they're casualties in this, And you guys saw last week when Boris Johnson actually, in fact, the DOJ, okay, I don't know if you guys saw this, but the DOJ, the Department of Justice, and the FBI just hit Chinese company Huawei with 16 counts of racketeering. Okay, RICO charges, B. Now, y'all know we've been messing with Huawei for a couple of years now. It's what, two years now? We've been on it 2-3 years now. We've been trying to bring them down. Now, Huawei, just think about them, compare them to maybe like Amazon. The impact that Amazon has on us. Like I shop at Amazon, Amazon own Whole Foods. Amazon is like embedded in our society now. Well, Huawei is like that times 10. All right, Huawei is embedded throughout the whole world. All these little devices and things. Like anybody ever had a Huawei phone, right? I used to have a Huawei phone back in the day. You guys remember when Cricket used to be high? I don't know if you remember Cricket, but like stores. But anyhow, Huawei, they're embedded in a lot of stuff. Huawei makes the technologies that actually go to in the systems that actually put up the communications. Yeah, to put up the communication towers and all. Huawei's embedded. Okay, so people glaze over like, oh, it's just one company. No, this company is embedded in everything. And if you get rid of them, you got to find a replacement. So the talks this week was that the U.S. hit Huawei with 16 counts of racketeering, right? That's a major claim. That's not going to go well with China. Understand? That's not going to go well with China because that's their number one company, okay? And also that the U.S. is trying to find a replacement, a company that can do what Huawei does to replace it, all right? But understand the U.S., we're like, and again, I'm drawing on my charts. The U.S., we're way over here, right? And Europe, Asia, all these countries are way over here. We got the waters that's parting us, okay? And Europe and China and Russia and all of them are right all together, right on land, okay? So they're closer. Now, interesting thing is, you guys know the new Prime Minister of UK, Boris Johnson, he support Trump, right? Pretty much the same, like Republican side in Europe, right? But this past week, because, Mike Pence, he's been going over there threatening all the European countries, telling them, do not do business with Huawei, right? They are off the list. They are blacklisted, okay? You can't do no business with them. But the UK Prime Minister did this past week. That was very interesting because Trump has been threatening tariffs on them already. I don't know if that's going to bode well, but if you take a look at from their perspective, bro, China down the street. Okay, it's down the street. Huawei come in, they put in this technology, and you're getting it for dirt cheap. Even if America found a replacement for Huawei, what kind of premium is Europe gonna have to spend on that? You see what I'm saying? Even if they get Ericsson or whoever company over here to do the work, you're gonna pay a premium for it. China, they specialize in cheap manufacturing. You're not gonna get a better deal than that. So even though the U.S. is putting pressure on them as a country of their own, they like, man, that's your problem, America. I mean, why y'all don't even have anybody to replace them yet. So why would I tell them, no, I'm not going to do business with them? You don't even have a replacement. You know what I mean? And if you do get a replacement, I'm going to pay a premium for that. That doesn't help my industries in my country that I'm trying to grow. You feel me? So I'm trying to see both sides. You got to see both sides of the story. I see Trump's side, see the European side, see the Chinese side. Just be open to it all. Okay. So I'm just showing you, like, you see the data, you see the numbers, but you need to know the stories that's going on behind it so you can know how to maneuver. It is what it is. So it's one of those questions, like, is this contrived? This is something that, the U.S. put over there to, make them fold under pressure? Or is it that, people been eating these terrible animals and they got it from animals? My thing is, Chinese people, they've been eating bats, dogs, cats, rats and stuff. They ain't never had no coronavirus. So again, it sounds good when they show the pictures of people eating bat soup. They've been doing that. Why you think they still doing it? You see what I'm saying? They've been eating bats and stuff. They ain't never had it to happen. All of us, it's come from bats. Okay. I know that there's a lot of gullible people out here, but understand the money control this whole world that we live in. You remember when I started the session, you live in the matrix. Understand, follow the paper trail and you see what's going on. Everything starts at the top and comes down to the bottom. I know people don't like the top down approach, but it don't matter. The top has the power. The banks are at the top. The politicians are at the top. Under that, that's the whole, the pyramid. So you got to follow the paper trail to know how it all comes down to you. If that makes sense, y'all let me know. But that's basically what it is. Also, man, I'll throw up a Bitcoin chart for you guys real quick because, we got a couple of crypto members in our group, and they're crypto traders. And sometimes I do favors and throw out some analysis on them. And Bitcoin is a very interesting little thing here. All right. So, Bitcoin is, when this first started out, again, it's crazy. Couldn't get no levels, but Bitcoin has actually been behaving to my Fibonacci levels. You guys know, I'm a Fibonacci expert, and, this is what we teach you guys how to use these tools. And the Fibonacci work like clockwork, right? So the interesting thing is you see money pile up in the crypto, right? And you guys remember the whole tulip bulb situation. Everybody's talking about crypto is going to, it's going to crash. It's, this, that, and the third. Even myself, I had to change of heart on crypto, and I'll tell you guys why. Okay, thanks, Ron. Yeah, I'll tell you guys why I had to change of heart on crypto, okay? So the reason I had to change of heart on crypto is because of the debauchery that's going on in the economy itself and the Fed's limited power. They only got 1.5 interest rates left. So when the recession comes, they're going to exhaust that 1.5 and they're going to hit zero. Okay. So at the zero, the policy don't work anymore. And if they go negative, it has negative impacts on the whole economy. It's going to destroy the whole value of the dollar. So the currency itself is going to, be destroyed. And that's why they're trying to hold on to the 1.5 as long as they can. Now, they may be forced to use it depending on how this coronavirus situation goes. But just understand that the dollar, as the Feds continue to manipulate and print money, the value of the dollar is depleting, and it's going to eventually, plummet. Digital currency is the future. Okay. I would like for us to go back to a gold standard, but we all know that the powers that be won't allow that to happen because there's no need to have a Federal Reserve if you have a gold standard. Gold naturally regulates the whole system. But, people will be out of jobs if it was for gold. But gold restricts their ability to manipulate, to print what you don't have. So in times they say, oh, well, we need to save the economy. We can't do it because gold restricts us. So let's take us off the gold standard and then, have the Feds print money at will. That's what we have going on. So anyhow, long story short, the currency is depleting. It's going down. China's already piling up and they're getting ready to launch their new cryptocurrency this year. And they're also backing their cryptocurrency by gold, which that's interesting. So you back the crypto by gold. I think that may be a solid position for crypto to have a future if it's backed by gold, which China is doing. China's buying up a lot of gold. And that's another reason why you're seeing gold continue to go high, because we have countries that's buying gold. The bias for gold is already in there. So when y'all see me go long on gold so many times, because the buyers are already in there. Ray Dalio and all these macro, guys are telling you buy gold, right? Central banks are buying gold. So that's what for that. Powell, he said, if you guys listen to his meetings this week, last week, basically that, they're monitoring the whole crypto situation. Now, when they say they're monitoring things, that means that, they got their eyes on it, right? But they ain't going to tell you what they're doing. But remember, Jamie Dimon of JP Morgan, he was very critical of crypto. Now, that's what they're doing over there. They got blockchain technology at JP Morgan. He's already talked about how they cut a lot of jobs because, a lot of the younger clients, they're all digital based, online banking is the thing now. And now he's open to crypto, right? And they're developing it. Goldman Sachs also. The problem with crypto, if you ever traded it, is that the volatility is just crazy, right? Anybody in here ever trade crypto? Crypto will be moving, okay? Like stocks, we can predict stocks, right? But crypto, you can't really predict crypto. When I say you can predict stocks, meaning that not like you're a genie in a bottle, right? But there's certain basic things about stocks that right? Like we dropped the article a long time ago about hurricane season, right? This common sense type stuff that you can figure out. And hurricane season is terrible, right? You hate that people, lose homes and stuff like that, right? So people lose homes, but those homes got to be rebuilt, right? And insurance companies will have to pay out a lot of claims, but those homes got to get rebuilt. Or new homes have to be built to get those people together. So where do you people get the material from? You get the material from Home Depot or Lowe's or some kind of building company. So you can kind of predict those companies are going to be the companies that's going to make money in this season. So you can predict that, right? But crypto, it moves, okay? And the markets don't shut down. Equities, we close at 4 o'clock, right? Crypto, while you sleep, that thing is dipping, okay? So the problem with crypto is that the price isn't stable enough for transactions to be really used for money. The blockchain technology is going to be here. They're already using blockchain. All right. But the central bank themselves, this is why I believe that they're actually going to make a digital dollar. And the way that we see crypto now, these crypto stocks, they're not going to survive it. Bitcoin might survive. All right. It's very popular. Bitcoin might survive. But the problem with Bitcoin and cryptocurrencies is that they don't have the power over the people. Government does, right? Government can force citizens to use currency. China banned Bitcoin, was it a couple of years ago when they banned it? It's something that they can do. They can stop people from using it. I can ban you from using it, right? Or, I can force you to use my currency. So again, I'm just give you guys a heads up. This is my hypothesis, okay? It doesn't mean I'm going to be right. But the way that this thing is shaping up, if this is a Scorsese movie, right? If this is a movie, this is who write the script. This is the way it's going to be. I think they're going to move into a digital dollar system. I think they're going to actually have to, because the Fed, they're destroying the whole system, the fibers of the monetary system itself. So just keep that in mind. Anyway, I threw this chart up here because a lot of crypto enthusiasts, they come in and out, and I post this chart over there, and my Fibonacci levels are, the crypto Bitcoin itself is behaving towards my Fibonacci level. So when I see it behaves appropriately, then I can, I can provide some technical analysis on it. But you guys see it. I told them in the group that, hey, this 10,000 mark, this is a ceiling, from this swing high to this low. Pop up here. This is a profit taking zone. I told them that it may consolidate in this region, but this is a profit taking zone. As you guys see, it's starting to come down a little bit here. It may come down. Crypto is good. I mean, Bitcoin, I should say, is good as long as it holds above this 200 moving average. If it falls beneath there, then you are in trouble. Okay. If it stabilizes and hold up, then it continue to go up. Now, the interesting thing is do we have money that's leaving equities and going into crypto? That's another question that I don't have the answer to, but that's something that we can keep our eyes on because, you know, if you got people that's willing to buy Bitcoin up here, the price of Bitcoin is down here. I don't give a damn what it is. It could be drugs. It could be anything that you're selling. If you're selling anything, the whole key is to buy low, sell high, right? Or sell high. That's the whole key to investing, all right? So it doesn't matter what you're selling. You could be selling shovels. You could be selling shovels in a snowstorm, right? You could be selling umbrellas in the rain. It don't matter. You buy low, sell high. So because Bitcoin is at this low, there's money that pile in and the prices go up, you sell at the high. Now with the stock market, with equities, you're at the high. And this is what makes it dangerous. In this level, let me go back. Right. And so, yeah, I mean, and again, you have a lot of, traders just, scared, the fear of missing out, FOMO, jumping into crazy stuff. You don't understand. The key is that not to be buying at these highs. And it can continue to go high. And I don't care if it continue to go high, but I'm not going to be a buyer at that high. I need for this thing to retrace. All right. See that 50, that was a good buy point, right? Smart money piled in, and hit the next target. Sells out. All right. You wait, let it fall down. You come back in. That's the whole buy low, sell high thing, right? That's the key to investing. People saw Tesla. Anybody catch that Tesla move? Yeah. People was in here, going crazy about Tesla. And Tesla was way up here. And if you the dummy that bought way up here, now you bag holding. That was a profit taking zone. You see what I'm saying? People get excited. Oh, they're moving Tesla. Oh, they're moving Tesla. Yeah, it's all, it's all great. But, you missed the move. You got to be in the squeeze. You got to be in the move before the news take out. Buy the rumor, sell the news. You already made your profit. You get out. You fight to see another day. All right. You catch it on the next move up. All right. So anyhow, I know that we're a little over time here. Let me just answer a couple questions for you guys. I'll take about 2 names, 2 stocks. Anybody got 2 picks that you want real quick? We'll take a look at those, and then I'll get you guys out of here. We're already at 50 minutes. Walmart. Okay, I do like Walmart and Kimberly Clark. So we'll talk about that here real quick, Dustin. Let me see who else. Can't decide how I feel about Facebook Libra compared to Bitcoin. Yeah, I don't even know if it's going to matter what we feel about it, Dustin. It's going to be, what Congress feels about it, right? Are they going to regulate Mark Zuckerberg, regulate his ass out the business? Who knows? Let's see. How do we watch? Okay. And how will the market behave that will tell us Bitcoin will crash? Walmart. Okay. I mean, it doesn't really matter if Bitcoin crash or not. I'm not a holder of Bitcoin. Again, Bitcoin, it doesn't mean that Bitcoin will ever crash. My hypothesis is that, the US will move into a digital currency. Everything listen, anybody catch the new Samsung S20 reveal? Anybody see that the new reveal? The S20, the new phone? Like I got the Note 10 Plus, right? Yo, the S20 is crazy. The video is shoot 8K video. You feel me? When y'all be seeing like all this video, I don't have my cameras. I got cameras and stuff, right? $1,300, $1,500 cameras. The phone itself shoot better resolutions than the cameras nowadays. So anybody that you want to start your business and you want to be on YouTube and stuff, you don't even need cameras no more. Just buy you one of those phones. You got better quality than Hype Williams was shooting music videos back in the day for millions of dollars. You got it on your phone now. But anyhow, digital payments, I haven't seen cash in years. I don't know about you guys, but Samsung Pay works everywhere. Again, and even though I'm a designer for Samsung, I'm not getting paid to tell you all this, right? I've been using this for like 5 years, right? Like Samsung bought the technology for the swipe of the credit cards, right? So oftentimes when I go to stores and I pull out my phone, they'll be like, "Oh, it don't work here," and I'm like, "Oh, nah, it works here." And I show them, and they be all amazed. They be like, "Oh my God, what is that?" I'm like, "This is not Apple Pay." No dig on Apple. Apple has got its perks, right? But Apple don't own the technology. Samsung bought the strip, the credit card strip. They bought that. So when you hold your phone up next to the terminal, bing, it registers every time. It don't matter if you want to buy a freaking Coca-Cola from a damn drink machine. Just hold it up, bing, and your transaction go through. It's crazy, right? So for that reason, I haven't carried cash in so many years. I've lost count, right? I don't carry cash. I don't even look at cash. I don't have to worry about getting robbed, you see? But that's just one case of like in China, if you show up, if you go to China, they won't accept your cash. Like you can't even shop at stores. The whole country is digital. That's why it's important to understand that this Huawei situation, all these Chinese companies, they are fully digital. They're like 10 years ahead of us in America. I hate to break the bad news to y'all. You ain't know. Just go to China. Terrence, he ain't here to tell you, go to Japan. You go to these countries, you see, man, these people, they don't even use cash. They won't even accept your cash. You got to be on a digital payment. They got these companies that actually specialize in the technology. Everybody's in digital payments. So digital payments is where it's at. Cryptocurrency is just the next evolution of that. You feel me? So that's just my hypothesis on it. And then take a look at this real quick from my man Dustin, and then we'll bring it to a close. All right. So Walmart. All right. So this is an interesting situation. Let me actually pull up my squeeze situation because I want you to see it real quick. Which squeeze do I have? Let's just go to the squeeze scan. All right. So if you look at my squeeze scanner, all right, and this is to show you real quick and we can go through it. But a lot of these companies that's in this squeeze are retail companies. All right, so that's something to pay attention to. These retail stocks, they're all moving in the same formation. They're all in the squeeze. Okay, so because they're all in the squeeze, they're more than likely all going to have the same move. And I don't know if that move is going to be up or if that move is going to be down. But I believe that move is going to be determined by Walmart. Walmart earnings is this week. So Tuesday, I believe. Let me see. Come on, Think and Swim. Show me what you got. All right, so the 18th. All right, so that's 2 days from now. So yeah, Tuesday. All right, so Walmart has its earnings on Tuesday. It's probably going to be, they normally do the big boys at the hours after. So Wednesday come in, we'll get the results, and this stock is going to make its move. I like the setup. It is in a squeeze, okay? And it's in a bigger turn squeeze too. If you guys take a look at the weekly chart, all right, this is a squeeze within a squeeze setup that bounces off the floor, pops up high. All right. So we got a buy trigger that's in here. We got the stochastic that's moving up. Momentum is still heavy on the short side. We need to see if this is gonna, come up, but the only way we're gonna find out is at the earnings. So at the earnings, we're gonna see if this is gonna fire short or is gonna fire long. And this is gonna be based off of fourth quarter reports, basically for Walmart. So the Walmart actually, make good money for the Christmas holiday season, but we yet to, find that out. It's an earnings play. And so if you're not already in here, then it's a good idea to wait earnings out, to be honest. I mean, the markets are closed tomorrow. You can probably get in if it's looking good, enough, and you got your risk defined and you can jump in. Earnings are, dangerous plays because we don't know the outcome. It could be one little thing. It could be a freaking analyst downgrade that you didn't even know was going to happen. And then next thing you know, your whole position, your technical's on point, but there was some unexpected risk that you didn't properly calculate for. But overall, I like it to the upside, but I don't know if it's going to really come into fruition, especially with this stuff with China. A lot of stuff that people buy from Walmart is made in China. All right. China's economy is getting wrecked right now. You know what I'm saying? And so it's going to be a lot that we're going to learn from the earnings of Walmart. So I'm going to be paying close attention to that. Again, it's a squeeze within the squeeze. It is a bullish setup, but because of this event that's in here, it makes it more dangerous for me to play. All right. Ideally, I would like to see it go up. All right. But there's no telling. I don't know. All those other names that you guys mentioned, those are like retail stocks. They're all pretty much moving in that same formation. And I think that, Walmart is going to be make or break it, and if Walmart, and then Procter & Gamble just had there. So let me see. Procter & Gamble is another one, right? It's in the squeeze setup here. Let's take a look at your KMB. Kimberly-Clark, same kind of situation. It's got a bull flag on there. The setup looks good, you take a look at it like that. The setup looks good. It's in a squeeze. It's got a buy trigger, right? So it's poised to move north, even though the trend is not participating. But I really think that this is going to, be determined by what we get from Walmart. I think because Walmart, that gives you insight on the retail sector, like how's retail really doing? You know what I mean? And you guys, you see all these other names beyond. Let's see, what else you got? KMB, you got Five, Walmart. There's a lot of those names that's in here. So I think earnings is going to be pretty light this week. I don't think we have too much on the target. If you're looking for some short exposure, though, I would look into the airline stocks. Airline, cruise line. With coronavirus, these companies are losing a lot of money. All right, so coronavirus shut down. They got people stranded out on boats and stuff like that. Right. Airlines, I know Delta, they're shutting down a lot of flights that can't get in. Terrence, I know I showed you something about Japan. They're actually giving free tickets for people to go to Japan, like 50,000 free tickets if you want to go to Japan, try to get tourists to come over. But, they're trying to get that stimulated. But if you're looking for some short exposure, probably like a Boeing or something like that. All right, Topaz, I saw you on the Facebook side. Let me answer that one for you. SPCE, space. Virgin Galactic. Okay. Virgin Galactic, I mean, you guys know Sir Richard Branson, is one of the leaders in this whole space Fugazi, I keep my opinions to myself about that whole space thing, but it's a lot more work that we can do on Earth than some imaginary stuff out in space with all our taxpayer dollars. However, Trump has created a space force and defense. There's a lot of, money from defense from this budget deficit that Jerome Powell's talking about that's going to be spent in military and this whole space stuff. So those companies will benefit from it, whether it's Elon Musk with his, SpaceX, or it's, Sir Richard, who's, he's on the forefront of all of that. I believe this is all hype. I don't see it as a long-term play. I think that the move is already over, to be honest with you. If you wanted to be in this play, the time to get in here was here. So when you saw it, bottom out and it came up against the moving average and then it came up above and price stabilized over, this is the time to get in right here, actually. So you rode the wave here. Could have got out right there if you held it, then you get in here. So you'll see. But I think that move and this is a penny stock. But I believe that move is over. We'll have to see. I don't know what he has. If you know something that I don't know, you let me know. But the whole space stuff, Trump got them trying to go back to the moon. They know that moon landing stuff was fake. That's why he over there trying to redo it. You know what I mean? Like, we need NASA to go to the moon because Elon out here telling people we can go to Mars. And you can't go to Mars, you can't go to the moon, and you faked it enough, but you got to try to do it for real, right? So, this guy, Sir Richard, he ain't even on the forefront of he ain't even up there, So Elon to get there first. Elon got the keys, so there's no favor. The cards is in Elon the Don's hands. He controlling, transportation. He got the cars, he got the trucks, he got the Hyperloop, he got flamethrowers. He throwing shots at Mark Zuckerberg on Facebook. Y'all ain't see Elon be turned, man. I'm like, I don't know what he know. He beefing with Mark Zuckerberg for some odd reason. He be beefing with everybody in space. If you guys follow Elon Musk's Twitter page, man, this guy is nuts, man. He kind of like Trump. They done banned him from even talking on Twitter because he be like talking junk to like Boeing and all these other companies that's been doing space for 50 years, telling them how ridiculous it is that they still using primitive technology on space and how he can do it better than them. So it's funny. It's like, I find this, comedy, but this is, look, the way that the economy is right now. And the thing about election season is here. Right. And my prediction is that Bernie is going to win the Democratic ticket. Okay. I know that people think that Bloomberg might be able to get it. I don't think Bloomberg is going to be able to get the black vote. I think that Sanders will be able to get the black vote over Bloomberg, but who's to know? We don't know. We know that the establishment is behind Bloomberg because they don't like, Bernie Sanders' socialist policies. And he's been, he has this negative name, socialist, on him. So it's going to be harder for them to push this or even get behind this kind of candidate. Now, I know it's talks of Bloomberg supposed to be having Hillary to run on his ticket. That may take the pull away from Bernie. If they can get Hillary or Michelle Obama on a ticket, then yeah, I think then they probably have a chance of beating, Trump through the popular vote. But as of right now, I don't see that happening. I think Bernie's probably going to win. And, just think about it this way. if Bernie does win the presidential election away from Trump, which I don't think he will, but just in case he does, all that defense spending, all the spending money on defense stuff is all going down. So all these hopes from space and all this stuff, it's getting scrapped. It ain't gonna go nowhere. It was just talk for the time. So people made money off the rumors, and the thing never came into fruition. I mean, people they claim they've been to the moon back in the 60s, 70s, early 70s. We ain't been back in 50 years because we don't have the technology. So everything is all hype. They can't do it. You just want your money and then tip on out. Well, I never fall in love with a stock, but that's right, man. We don't remember names, man. Treat them stocks like thoughts. In and out. But yeah, man, with that being said, man, I think we had a pretty good session. We'll be back next week. And also for the new members, if you guys haven't gotten the intro to options trading book, make sure you get it. It's free. Okay. It's a real book. You can download it. You can print it out, what have you. This is a really good book. I wrote this book, I think, a year ago or so. We just, released it, and it's free. All right, can't beat free. It's a really good basis. Or if you want to learn this game, download it. And if you're serious about learning, because some people say they want to learn, but then they figure out, I got to learn how to read them charts and stuff like how Pierre's doing. I ain't trying to do all of that. Then there's other alternatives for you. But if you want to learn how to trade and make money, then go to our website, WallstreetJackboyz.com, and make sure you sign up and get the classes. And for those that's there, also know that we're revamping the whole website, the classes. I'm busy all day, every day. I'm doing a lot of stuff. You guys been seeing the videos? Y'all seen the YouTube lately? The YouTube is starting to grow. And we've had Wallstreet Jackboyz for about 3 years now. We've been around. We just haven't marketed. We got our own website, right? We don't do YouTube. We just jumped on YouTube. So we got over 500 subscribers right now, which is great. So if y'all haven't subscribed, make sure you subscribe to YouTube and share the content. I'm going to get some more content out there to you guys too. But right now we're actually revamping the whole website, the courses, curriculum. I got lots of new technology, and I'm just excited about, bringing, the best value that I can bring to you guys. So I want to thank y'all for y'all support. And hey, it is what it is. Tomorrow, markets closed, chill, relax. You don't have to get up so early. Okay. We'll be back on Tuesday. All right. Y'all have a good night. Peace.